Hello, fellow traders. 'Tis I, the Rumpled One, bringing you a new trading strategy. I call it the Daily Wick Zone. I was looking at the charts, as I have been for the past decade or so, and I noticed something, and so I decided I should check it out. You see, here's the previous daily candle's upper wick zone right here between these two lines, and then here's the lower wick zone. And I noticed just looking at it that very often price doesn't stay in the wick zone. Of course, I had to write a frequency distribution to prove it. And so the first one I wrote was, how many times does it stay between the high and the top of the candle? How many times does it stay between the bottom of the candle and the low, and how many times is it outside the candle? Well, over the last 1,000 bars, you can see that the euro yen closed outside the previous candle's wick 75% of the time. So to me, that tells me something, that there's money to be made. So I said, but that's not enough, so I wrote another frequency distribution. And you see here, we want to know how many times it goes through the top zone. Well, 47% of the time. And how many times did it go into the top zone and then back out the bottom? Here, 26% of the time. Ditto for the bottom zone. It went in, came out 29% of the time, and then through the bottom zone all the way through 44% of the time. And about 12% of the time it wasn't in any zone, meaning it closed within the body of the previous day's candle. So you see, these percentages don't add up because price can enter and exit both the top and bottom zone. So it would get counted more than once. But once again, that just means to me there's money to be made. So you see here, returning to this chart, you can see just how far price has gone outside of that upper zone right there. So if you would have entered this trade at that line, you'd be sitting pretty right now. And that's what this chart shows. You see, the close minus the previous high is 43 pips right now. So once again, this is a very simple trade. I've posted some of the indicators, and some of them are donational. But you really don't need indicators. All you need to do is look at the chart. You can see when prices get near that previous high, you want to go long. And if it's up here above the previous candle's top and it's coming down, then you might want to short it, because 7 out of 10 times you're going to have a payout. So I hope you've enjoyed this, learned something. If you have questions, feel free to ask. And as always, it's not what you trade, it's how you trade it.